You're right about history repeating itself. It begins to look a little bit like the Asian financial crisis, where we had a series of unconnected events, Thailand, Brazil, Russia, that contributed to a lot of global upheaval. I think one really important thing to watch is what happens to the euro. That's a symptom of the contagion. Apparently, a lot of European banks are exposed to Turkey, and that's taking a toll on the euro. And the dollar, of course, is going up as a result, as Steve said.
Yeah, Ron, I don't see anybody trying to contain this yet. Everybody's just pouring kerosene on the fire
the president, and the president's lighting the match.
And Prime Minister Erdogan as well.
Absolutely, and as David was saying, there is some historical precedent for this. It wasn't, you can go back to 1994, Mexican peso crisis, 97 with Asia, 98 with Russia, and all of this began with the risk of the U.S. Federal Reserve tightening interest rate policy and the dollar going up. That was the first end of the fuse, and then things began to spiral out of control over the next couple of years. I think this gets bigger for two reasons. Number one, the president, as Kayla said, is using a blunt instrument to deal with every problem he has with every other country. That's not good to start with. And number two, with the dollar strengthening, when we see these emerging market crises, even though people talk about idiosyncratic risk, one country to the next, it never works out that way. They all correlate. The correlations go to one, and then you ultimately have something that's global as opposed to country by country.
And speaking of risk, I mean, Seema pointed out, I think, a key fact. Turkey has external debt as a percentage of its gross domestic product is about 50%.
Yeah. So this is if you go back to the Asian crisis, for instance,
Yes.
all these countries at the time had dollar-denominated debt. When their currencies were cut in half, their external debt service burden doubles.
Right.
And that leads to higher inflation and a collapse in the economy. We're likely to see that, given what we've seen in Venezuela and some other countries. You could see that in Turkey. Again, a NATO ally, as Steve pointed out, that could be a very critical situation.
Yeah, David, what about emerging markets? Because you had Wall Street really pushing this as the next go-to growth area after domestic stocks ran through their cycle. What's the impact on these other nations?
Well, there's been a lot of cash flowing into emerging markets, much of it hunting for yield because rates were so low in the United States. And this is the kind of circumstance where the money starts to flow out. That's what happened to Argentina, and it could happen again. I think one really different thing this time, as what you've mentioned before, is usually the president of the United States is not trying to make things worse. He's making things worse, and that makes it hard to see how the International Monetary Fund can come to Turkey's rescue. Turkey doesn't want the conditions that the IMF would put on it, right, and it doesn't sound like the president would support them. So that could make this go on for a lot longer.
And one thing, if I could, on EM and Wall Street, right? So we've seen a lot of presentations since, I'm sorry?
Emerging markets.
Emerging markets, yeah. I'm sorry, yeah. We've seen a lot of presentations since the start of the year where Wall Street analysts were saying, listen, the U.S. is getting long in the tooth, this economy is going, the Fed's tightening. Usually around this time in the U.S. economic cycle, emerging markets outperform for 3 years beyond the United States. If you challenge that assertion, a lot of analysts would tell you that you didn't know what you're talking about, and history, as your guide, would suggest that this emerging market rally should continue for quite some time. They downplayed the risks of tariff increases, they downplayed Fed risk, dollar risk, and they've been dead wrong all year long.
David, what about Fed risk? I mean, what's Jerome Powell thinking about all this right now? At the last meeting, it was pretty clear they intend to raise rates 2 more times, but that's only going to add fuel to the problem here as well if they continue to do that, won't it?
Right. So obviously the Fed will take note of what's going on in the rest of the world, but they like to say, and I believe they mean it, that their first concern is the United States. So I think unless this gets a lot worse, they're likely to stick to their tightening. After all, we're beginning to see signs that inflation was picking up. You know, the interesting parallel from the late 90s was when Alan Greenspan was chairman, they flinched and they cut rates in the U.S. Greenspan said at Jackson Hole the U.S. could not be an island, an oasis of prosperity in a troubled sea or something. And it turned out to be wrong, that the U.S. actually was not hurt at all by the Asian financial crisis. So I suspect they keep going. But I think another really important thing to look at, it's different this time, is how big China is. When we talk about emerging markets, China is the big emerging market, and they seem to be slowing down, and that's where the trade tensions could be the most severe with the U.S.
So real quick, David and I were both on the Fed at that time during the Asian currency crisis. The reason the U.S. didn't get hurt is that the Fed responded by, in the Asian crisis, not raising rates after long-term capital in Russia by cutting rates and extended the durability of the recovery. So they didn't just flinch, they acted, and it helped protect the U.S. from the contagion effect.
Well, hopefully somebody in power is watching history as well. Ron, David,
Oh, they're
always
all
good to
watching
see you.
CNBC.
Yeah, well, that's